So CrowdStrike reported earnings and it is being absolutely hammered. In this video, we're just going to review the earnings and see what was positive, what was negative, and what are some of the observations that I noticed. Right now, the stock is down by over 12% after reporting earnings. It went high as $400 today to now trading at $352. Number one, it had an amazing revenue beat. Its revenue for the year is almost $4.3 billion, and it increased its cash flow by 23%. Now it has a cash flow of $240 million. When you are a company that is growing like CrowdStrike is, it is okay to have a low cash flow because you're reinvesting a lot of that capital. But if you can deliver a strong cash flow while you're still growing, that's a plus on top of a plus. So I'm liking this number so far. Next is its net new RRR. It achieved $807 million in new ARR, which is very predominant in the cybersecurity sector. People value that metric a lot and is able to achieve this at a record time, which is very good. Another thing I really liked, it had an 80% increase in non-GAAP subscription gross margin. That's wonderful. That's sticky services. Anytime you can link your product and services to a subscription-based model, that's recurring revenue, and it gives you pricing power if you have the product that is extremely sticky, which seems like CrowdStrike does have that. So seeing that 80% increase, I like it. But I want to know the net retention, meaning how much money are they spending and how many people are sticking with the subscription model after they've already subscribed. Next, this is clearly influenced by Palantir, and that is a score of 40. It has a 56 on a score of 40. That means a company that's growing above 40% and a few other metrics. So this became very popular when Palantir rose to fame, and it had a multi-X appreciation in its stock price. This really became a prominent figure, and you can see that they're kind of playing on that a little bit, saying, hey, look, if Palantir is doing good with their net of 40, we're also doing pretty good with the net of 40. So that's good. It's 56. They're growing above 40%. They're well positioned to deliver amazing growth in the future. It's not a metric I personally really value that much, but it is a metric that the industry values, and there it is. Now, in terms of the sector they operate in, this sector that they are operating in has a size of $116 billion, and that is huge sector. Now, this sector is expected to over 2x by 2030. I like to see that as well. By 2030, this sector will be above 250. I know the presentation says 2030, but by 2029, but by 2030, I'm expecting that number to be even above. So it gives me confidence that I can hold this stock. If I were to buy this stock, I can hold this stock for the next 5 years without worrying about will the sector itself become mature way too quick. So they're dominant in an industry, in a section that is not only massive in size, but is continuously growing. Another positive for this company. These are all the partners it works with, and they're very notable ones. You can see Microsoft, you can see Palantir, you can see Splunk, you can see, there's a few other that are very notable that I don't know of, but you guys get the gist. In terms, now, this slide was added because of their outage that happened in 2024. Even after the outage, they were very quick to respond and restore all the services and the critical products to their high standard, even getting some high user appreciation, high appreciation from critics, and high appreciations from vendors that they work for and with. So another net positive, in my opinion. This indicates that customers are very happy with their services that they offer. A 96% willingness to recommend score as of September 2024, which is very impressive because that's about 4 to 5 months after that big outage happened. So clearly they're saying, look, even though we had this event, we're still highly recommended by our customers and liked by our customers. Now, their Falcon platform is one of the biggest growth driver. Now you can see they have now you can see anyone that has 5 or 4 models. Now you can see their insane growth. They had a 67% increase in customers that had 5 or more models, which is impressive, and a 21% increase with 8+ models. That's a lot, meaning they liked their initial offering so much that 67% of customers said, give me more, give me 5 additional from that. And they liked it so much. And 21% of customers liked their initial offering so much, they're like, give me 8 more products and services that you offer. That's 21% of customers that did that. That to me indicates this company's products and services are not only in demand, but are highly liked. And most importantly, they're very sticky. They had a 50% increase in ARR over 1 quarter. Very impressive. I like seeing this. And this was mainly driven from cloud security, identity security, and large-scale next-gen SIEMs. Pretty good. More of the same. What's impressive is their growth in their subscription model revenue. In 2028, they grew by 80%. Again, they grew by 80% in 2025. Now, if this trend were to continue, this company could multi-x its revenue from today's $4 billion. I'm expecting 10. When I did my calculation, I was expecting 10 by 2030. But seeing these numbers, 80% growth in 80% gross profit, and you're increasing your revenue at a healthy margin, I think this company could potentially even hit 15 or 20 billion in revenue by 2030. These are very impressive numbers, and their cash flow is continuously getting better, but their margin are getting smaller, which I don't think is a big deal, to be honest. I feel like they can increase the margin as well if they just start concentrating on profitability. I don't think they're doing that right now. They're more focused on growth. So even these numbers are very impressive. Net retention is what I was telling you guys about, and it's amazing. Once someone subscribes to a service from CrowdStrike, they have a 119% chance to sticking with it in Q1. In Q4, that was still 121%. That's amazing. Meaning if you try a CrowdStrike product and service, it is so good that you're going to recommend at least, if 100 people try a product or service from CrowdStrike, it is so good that at least one of them will recommend another person, and they will keep it and they themselves will keep the service. Their cost to marketing existing customers is basically zero. At least that's how I interpret it. Their subscription revenue hit 1 billion for the first time. Very impressive. I like that. 80% increase in gross margin, 97% increase in retention rate, and 204 million in cash flow. This is all in 1 quarter. That's impressive. And you can say a few other metrics that are very, very critical for their future success. And all of them are in the green. And by high margins as well. They have a 45% increase in cloud deployment ending ARR. Their overall revenue for the last quarter increased by 23%, which is 10% decrease from the same quarter in 2024. This is a company that's starting to become mature, and you could even see that in the full year revenue increase. Last year, the full year revenue increased by 31%. This year, the full year revenue increased by 27%. It's still growing. It's still profitable. It's getting to scale, but it is slowing down. That is something that you need to keep an eye on. If it starts to decelerate its growth quickly, then it becomes an issue. But right now, a few points up and down year to year, not too much of a big deal for me. If I was an investor, I'll start worrying about this. If it starts hitting 23%, 22%, then I'll be like, okay, what's going on? Why is your growth all of a sudden decelerating? Are your customers finding products, services, or deals better than what you're offering? Then I'll be concerned. Another thing that kind of concerns me, another thing that really concerns me is almost 67% of their revenue this quarter came from the United States. 68% came from, and 68% all of their revenue came from the United States last year. So basically, majority of their revenue is highly concentrated in the United States. That concerns me. Why isn't Europe picking up their products and services? Why isn't Asia picking it up? And why aren't others picking up their product and services at a more aggressive rate? If this company is truly expected to be a dominant force in the cybersecurity industry, you need more than one regional dominance. You need a large scale dominance worldwide. So I would like to see the number in Europe increase, because Europe doesn't have that many regulations on US products and services. Asia does. They are a bit concerned with us, like China, like India. They don't like our cybersecurity offerings that much. They think we are tainting with them a little bit. But Europe is the complete opposite. They like our products and services. I like to see this company take advantage of that. The fact that they haven't taken advantage of that in the last 2 years concerns me a little. Not something that I would really focus on and would actually have a strong impact on my thesis on whether I should buy the stock or skip it, but it is something I would keep a close eye on. Alright guys, I hope you like this analysis. Alright guys, I hope you guys like this analysis. Alright guys, I hope you guys like this analysis. Let me know if you guys see more of me breaking down the earnings call. This is what I noticed. In my opinion, just off the earnings call, I have to do my analysis to tell you if it's a buy or sell. But just from the earnings and their growth and the fact that the subscription-based model is something that's growing aggressively and is becoming very sticky, I would give this company a higher buy, especially with the pullback that I had today. Anyways, if you like this video, like, subscribe, and follow, and I'll catch you guys in the next one. Peace.